All right, guys, it's that time again to talk about what I'm buying this month. And there are some massive names on this list, and also some names that are barely ever on this list. So we got a good mix of stocks today. So I'll give you those stocks specifically today, why I'm looking to buy them, what I think is the future of those stocks and why they're such a good deal, and a few other tidbits here and there. So just make sure you like the video if you like getting the truth without the hype. Now remember, these are just the stocks that I'm targeting right now today. There's actually 16, 17 stocks on my watch list specifically there, but these are the ones that are closest to my valuation and my price targets, more importantly, of where I want to buy stocks, or they're actually below my price target of where I want to buy stocks. And so I'm going to continue to buy these stocks at these particular prices. And remember, this is just based upon my plan, my valuation, and all that good stuff like that. And of course, other stocks could pop on there if they all of a sudden crater significantly or something like that. But these are the ones that are kind of like the closest alligator to the boats per se. So I've got to start taking shots on these particular stocks and start adding more and more of these stocks to my portfolios. Obviously, each one of us has a different portfolio, different plan, all that good stuff. All that stuff should add into your particular mix of stocks that you're looking to buy this month. But for me, these are the ones that hit the mark. So stock number one is SoFi. Now, I just wrapped up my DCA on this stock last quarter there, and we've been able to actually accidentally added one batch of shares because I forgot I wasn't DCAing anymore. So I went on ahead and DCA'd anyway because I liked it, but it's right around my price target once again. And so it's right there. I could very well be adding more shares once again to it. It's below my price target there. And I'm just going to continue to add to this stock until their earnings give me a reason to not continue to add to this stock. They continue to execute earnings in and earnings out over and over and over again. And as the stock stays depressed and as they continue to increase earnings each quarter, that valuation gets cheaper and cheaper and cheaper. And remember, guys, share count's what matters in the end. And that's all I'm doing. I'm just continuing to build out the share count. I don't need any more shares. But if you want to continue to give it to me on a significant discount, I'm going to continue to add this stock as long as that management team continues to execute, which they've done for 10 plus quarters now. So I have no reason to think that they won't continue to execute in the future. So obviously next earnings will tell me something different. But for right now, this month, hey, got to keep adding to this stock every time it dips down below my price target. So stock number two is Meta. This is a stock that got disrespected after earnings. Now it's recovered a bunch, but man, it just took a beating right after earnings. We were able to add at 165, 162, and I'm going to continue to DCA in the stock as long as they're going to continue to keep it right around that $500 mark. Obviously, when it gets down below that, because Meta is a great stock with a very, very long runway. I don't know why people get down on this stock. I don't know why they doubt this stock. There's nobody better than ads outside of maybe Google, than Facebook, Meta, whatever the case is. And they have so many future levers to pull in regards to revenue and bottom line profits because they have massive profit margins there. They haven't even really monetized WhatsApp yet, much less some of the other things that they have out there that they're trying to grow. And they have a massive customer base in order to draw that money from. And there's just, I don't know. It's one of these things. I don't know why people doubt it. I know Zuck isn't necessarily the most popular person in the world. He's definitely weird. He's definitely quirky. I don't agree with him all the time. But in regards to running this business and making it absolutely print money, hey, there's very few people in the world that could do it any better than he's done it. And it has such a long runway of tangible things that I can see right now that are easy to monetize into the future and are going to almost be pure profit to that bottom line there. I'm excited to hold the stock. I'm excited to continue to get shares on the cheap. And when you look at valuation, which remember guys, that's what we talk about. Valuation is the most important. It's trading right now at a forward multiple of around, the low 20s, low to mid 20s or so, which by the way, so is McDonald's. So think about that for just a second. Which one do you think has more future growth built in, better growth rates, obviously more profit, more margins? Who's going to print more money in the future? Is it going to be Meta? Or is it going to be McDonald's? So for anybody trying to tell you it's overvalued, that's not necessarily overvalued in my opinion. Obviously, we can differ on that opinion. But man, I'm looking at a forward multiple of 24, and without any of those monetizations happening yet, that's what I'm paying right now for it. I'm going to happily continue to just DCA into the stock when it makes sense moving forward because, hey, you want to get down on a great stock like this, I'm going to happily add it. And remember, if you want to see all those buy and sell alerts in real time, make sure you check out the pinned comment down there for my group where you get to see that, my complete watch list with price targets, a lot of other things like that, a lot of discussion on a lot of the different stocks here we're going to talk about today. I just wanted to make sure you put it out there if you want to see that, or you want to see my buys in a $250 portfolio challenge to see if I'm adding any of these stocks in there. It's also a cheaper membership there you can get as well. So that's the pinned comment down there. All right, so stock number three is PayPal. All right, this is one, I know it frustrates us all. It frustrates me to no end, but I understand the larger game here at play, and they continue to have good, tangible news come out, not hype things that are coming 5 years from now or anything else like that. tangible news now that will add to the bottom line, like, Venmo being accepted by eBay, for example. Another revenue generator, doesn't really require PayPal to do a whole heck of a lot, and yet that's going to hit the bottom line. And there's been multiple announcements like that over the past month or so, but yet the stock just can't get started. I understand it's up from the bottom, but it's still just kind of, we can't get that momentum to get up over 70 to kind of make that next leg up. And hey, I don't know what it's going to take. Maybe it's more consistent earnings, but I have heard nothing out of management in terms of what they said, and more importantly, what they've executed to so far, although it's early. But so far, they have executed to what they said they were going to execute to. And so for me, this is just getting more gifts. Now, I understand it's frustrating to have a stock down for a year and a half, 2 years. Understand completely. But if Apple can trade down, which was the biggest winner during the greatest bull run of all time, if it can trade down for a year and a half or so, why is it unreasonable for PayPal to do the same exact thing when it's not the best stock in the world? And it's also not during the greatest bull run of all time. To me, that kind of makes more sense. And I understand, you continue to say, hey, well, I could have bought this. I could have done this. We can all look back. I can pick a stock right now. Whatever stock you pick, hey, I could have bought NVIDIA and it would have done this. Cool. I could have also bought another stock and it returned 7,000% this year. I don't know. Why didn't you pick that stock instead? See, we can all play this game all day long. I understand the frustration with it, but I'm not a trader, so I'm not looking to trade in and out. I'm looking to put my money in the best place at the time. And unfortunately, right now, whether we like it or not, PayPal is one of the best places to put my money to eventually get that return. So yes, my share count is increasing. If PayPal ever does anything, I stand to make a lot of money on the back end there. But for right now, I like the execution, just we're not getting the price action we thought we were going to get. And so I got to be more patient with this stock. All right, and on to the final stock here. And this is one, some people may disagree with it. Some people may agree with it, but let's take a look here and see. It is the last one on my list this time. And that stock would be Palantir. Look, guys, I know I've said it in a few videos and I'm going to say it here again. Share count is what matters. And unless, Palantir just craters down below 10 bucks, every single share from here forward is basically an average up. But that doesn't mean that I should stop buying. Share count is what matters in the end. And right now, especially when we're in kind of spot where there's not significant discounts a lot of different places, I need to just be executing simple DCA, putting that money to work and increasing my share count in a lot of different stocks. If looking at Palantir specifically, and let me just give you a Palantir example here. Let's just say my average is $8. I don't know what it is. I haven't gone and looked. I got multiple accounts. I'm not doing the math on it, but I know it's under 10. So let's just say it's $8, $9. We'll say $9. Let's say Palantir goes to 90 in the future. Man, I'm not going to care too much if I happen to buy a bunch of shares right now or over the next 6 months. If in the future it's at 90 and now my average is at $11, $12, $13, I'm going to be glad I added all those shares, even though it increased my average, because I have a lot more money at $90 than I would have if I just would have kept my average low, had a better return, but I would have less money in the end. And that right there is a key understanding that you have to have with investing and with stocks specifically, is that matters far more than anything else, especially when we start talking about 10 years, 20 years from now in a great company. You will have wished you would have added on every single dip along the journey. Just ask NVIDIA shareholders who are sitting on 100,000% gain in that stock, or Apple investors like myself who are sitting on a 54,000% gain in that stock. The only thing you'll be saying is, I wish I would have bought more. That's it. That ends up being the line there when you get those types of returns. I'm not saying Palantir is going to return at either one of those numbers. It's just an example of why share count is so important. And if you want to see all my buy and sell alerts in real time and see my complete watch list with price targets, you get 5 courses for free. You get the free coaching that's there. You get to use the stock analyzer tool for free. You can talk to me anytime you want, slide into my DMs, jump on our live Q&As. Guys, there's so much involved in the group. Oh, by the way, the best 6, 7, and 8-figure Discord out there with some incredible folks in there helping you out as well. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.